Good morning, students. Welcome back. So today we'll start with a new topic, and that is about materiality, risk assessment, internal control. Okay, so if you refer the chapter, it's chapter number 4. So let me just share this chapter. Right. So if you talk about this topic, which is in relation to risk assessment, internal control, and also, of course, some of the aspects that we need to cover in relation to the materiality. So we can say that once again, it's a sort of continuation of audit planning. Audit planning is all about those aspects in relation to the audit that we discussed in the previous session. So in a way, we can say that we are continuing with that part. Okay. Yeah. But at the same time, we also need to understand that when it comes to the planning, okay, so even if we talk about the planning stage, all of these aspects, that means the risk assessment as well as the materiality assessment, okay, wherein you determine the materiality, all of these are very important aspects as far as audit planning is concerned. And to a certain extent, audit is very much driven by some of these activities, okay, which is about risk assessment as well as the materiality. I think on materiality, we discussed some of the aspects about the materiality in the previous session in terms of the relevance of the materiality. Okay, as to how this is really relevant, where do you need this? Okay, some of those aspects we talked about. So today we'll continue on those aspects. We'll just try to also understand that when it comes to the materiality, what are the factors we need to consider? Okay, what are the ways through which we need to get on to the determination of materiality? Okay, some of those points we'll just try to look at. Now, let's begin our discussion with this aspect related to, we can say, risk assessment. Okay, now, risk assessment means assessment of risk. And in terms of assessment of risk, what is going to be the first step? Identification of the risk. Okay. Now, what is this risk that we are talking? Risk means anything which can go wrong in the entity. Yeah. So that's what you call as risk. And in an entity, in relation to various activities that it will have, once again, we can say that there are various types of risks which are possible. Yeah. Now, how do you associate those risks with the activities? Now, this is one part which the management needs to do. Or you can say the management is expected to have completed this. And that's how they must be into the business. That's how they must be into the various activities. Now, why is that important? And why is the management expected to have already done this exercise? Because without this risk assessment, or you can say without the identification of the risk, how will the management know as to what are the challenges or what could be the potential challenges? And where do they need to have the controls to take care of those types of risks? So that's why it's an important ingredient for the management to look at, for them to run their business. It's a critical activity, one can say, because without this activities that they will be performing, they will be subject to a lot of risks, and that is how their business may not be run, you can say, in an efficient manner. Some of the processes which they will have, they may not be moving on in the manner in which it is required to be actually done. Yeah. So now, risk is, as we discussed, risk is all about what can go wrong. Okay, in very simple terms, it's all about what can go wrong in relation to any activity, any process. Now, this is something which the management needs to do. Okay, so that's the aspect related to the management. And in relation to this risk identification, risk assessment, management will also have the controls in place. So that's the part that we talked about the management. Now, let's talk about the audit side. Because what is our objective? Our objective is to get on to the audit. Okay? Our objective is to look at as to what is the risk in terms of audit of the financial statements of an entity. Correct? Yeah. So now, what is the objective of the audit? To ensure that the financial statements are free from material misstatements. Correct. So we can say that that's the objective of the audit. Correct. For which the auditor is required to express an opinion. Now for this objective, what is it that the auditor will do? Auditor will express an opinion. Correct. So therefore, as far as the audit is concerned, what is the risk? The risk is that the auditor may not have done what he was required to do. Correct. Or he may have done that erroneously, in other words. Or in other words, we can say that the audit opinion of the auditor may not be appropriate. That's the risk. Yes or no? Yeah. So once again, the point is that auditor will not want to do this. That is not going to be the intent of the auditor. He will always want to look at the things in a manner that his opinion is correct. Yeah. That he is giving the appropriate audit opinion. But there is always a possibility, there is always a risk, we can say, that this opinion of the auditor may not be appropriate. Yeah, so that's the challenge which the auditor will also be facing, similar to what the management will face. Okay. Yeah. So now let's try to understand about this audit risk, which we have broadly understood as to what is that in terms of some of the technicalities which are associated with that. And then we'll move on to this discussion as to how this risk on the part of the auditor can also be managed. Okay. Yeah, because we are interested in the audit side. Okay. So now, when it comes to the audit risk, we can say audit risk once again will have some components. So there are some components of audit risk. Now, what are those components? First is what you call as inherent risk. Okay. Now, what is the meaning of inherent risk? See, inherent risk is something which you can say is inherent in the entity or is inherent in the financial statements of the entity. Now, what does it mean? So let's take an example. technological developments might make a product obsolete. Now, there are certain industries wherein the technological advancement is quite frequent. Yes or no? Now, as far as those industries are concerned, for example, if you talk about auto sector in particular, they will have some inventory, or you can say the entity will have some process. On the basis of the process which the entity will have, they must be manufacturing some products. They must be keeping a stock of those products. Yeah, so you can say that's the way the management must have been working, the way the entity must have been operating. Correct? Now, because this industry is subject to some risk, so that's why what will happen? The inventory which it will have, because it is subject to frequent changes, because of the advancement in the technology which is taking place, this inventory may become non-moving or may become obsolete, and thereby its valuation may get impacted. So in this case, what do you call this risk as? It's something which is inherent to the industry. So as an auditor, when you audit a client which is into such type of industry, so what will happen? You will have to understand that as an auditor, the financial statements that you receive, they will always have this element of risk, okay, which is inherent to that industry, which is inherent to that company. And therefore, as an auditor, you will have to plan your audit procedures so that you can take care of that type of risk as well. Now you may be thinking that, is this not required to be done by the management? Because of course, it's something which is related to the company. Yes, of course, it's something which the management is also required to do. But we are looking at it from the audit's perspective. As an auditor, we also need to look at it. We also need to consider this aspect. Correct. And we also need to ensure that what the management was required to do, whether they have done that or not. Yes or no? Yeah. So at the first place, what can we say? That there is one risk which you call as inherent risk. Okay. With which one will have to live with. They will have to take care of that risk. Okay. So that's one. Next. Control risk. Now, we discussed that every entity, its management, they need to have some processes in place. Okay, they need to put some processes in place. What is the objective? Objective is to ensure that things are moving in an effective manner, efficient manner, for which the management will identify the risk, and against the risk, management will also put down the controls. Yes or no? Management will set up controls, which are also called as internal controls. Internal control means controls of the management to take care of risks which are identified by the management in relation to various activities of the entity. Okay. Now, at times, what may happen is that management has identified the risk. Okay. Means in a manner it was required to be done. They have done this. They have identified the risk. And against the risk, they have also set up some controls. Okay. But even then, something may go wrong in relation to that particular activity for which the control was established. Why? Because that control failed. Okay, so the control was set up, but it didn't work. Again, it's possible. Answer is yes. Answer is yes. So it's not necessary that the controls which have been set up, they may not fail. They may fail. Okay, objective is not about or it will not happen that every now and then they will fail. But of course, they may fail. So what if that happens? What if the controls fail? So there's always a risk. So you can say this is also a kind of risk. Will the management be doing something about it? Of course, they must be doing something about this aspect as well. But whether the management does that or not, or whether they have done that during the year or not, this is again something which the auditor needs to consider. Yeah. So therefore, the risk that the entity's internal control system will not prevent, detect, and correct on a timely basis any sort of misstatement. So what do you call that risk as? Control risk. Okay. Yeah. Third. Now there's one more risk which could be there. Now what is that risk? Detection risk. Now this is something which is important. See, if you look at inherent risk, control risk, to a certain extent, these were the risks which are also, you can say, to a certain extent, you can associate to the company or the management. Yes or no? Because inherent risk is related to the entity. Control risk is again related to the controls of the management. Now, when we talk about this third type of risk, this is what you call as a detection risk. So what is detection risk? It's a risk that the auditor will not detect a misstatement. Okay. Now, what does it mean? See, when it comes to the audit, let's suppose the financial statements contain a lot of errors. Now, what is the objective of the audit? To ensure that the errors are removed. Yes or no? But at times, it may not be possible. Why? Because of the approach which the auditor has to pick up. Now, what do you mean by approach? Approach means auditor may not be able to detect those errors which might be there in the samples which the auditor has not selected. And is there anything which the auditor can do about it? Answer is no. Let's suppose there was a population of 100, out of which auditor selected 7 samples. Sample selection was logical, done in a manner the way auditing standard requires. Okay, so we are not saying that there was some lacuna in terms of sample selection. Sample selection was good. Okay, the technique was appropriate. Now, in respect of the 93 samples, which the auditor has not checked, which he was not supposed to check, it may happen that the error was, or there was an error in some of those samples which belong to this population of 93. Correct. Now, what do you do then? Can you do anything about it as an auditor? No. Will you get to know about it? Again, no. Why? Because for the samples that you have not selected, how will you know there is an error? If you would have known, you would have selected those samples and you would have got that corrected also. But now you don't know. Okay. So that error may remain. Therefore, in those financial statements, yeah. So now this is also one of the risks which the auditor will always have. And why is this risk there? Are we saying that the approach of the auditor is faulty? No. Is he not diligent? No. Yes, he is diligent. But the methodology which the auditor follows, there's always a possibility about such type of risk. Yeah, there's always a possibility. So therefore, whenever the auditor will audit, he will have to look at all of these aspects. Yes or no? You'll have to look at all of these aspects. Now, all of these risks are important for the auditor. As far as first two risks are concerned, inherent risk, control risk, what can the auditor do? Auditor can get onto the controls understanding. He can do this risk assessment. Okay, some of the areas which are subject to the risks, he needs to look at that. Correct. So a lot of such aspects are required to be considered by the auditor. And the idea is what? To reduce the risk. Okay, that's the objective. Or you can say just to take out this risk completely to a level which is acceptable to the auditor. Yeah, so that's what we can say. That's how you will go about it in terms of such type of risks. Now, in relation to the third risk, which is related to detection, here again, auditor needs to work out something. What does it mean? It means auditor will have to do something in a relation to his audit approach so that this third risk can also be minimized. Right? This third risk can be minimized. And therefore, how can the third risk be minimized? Third risk, you can say, can be minimized by, you can say, looking at the extent of testing, or by ensuring that the extent of testing which the auditor has planned is appropriate, or you can say is sufficient to take care of third type of risk, because third type of risk is all about extent of testing only. Yes or no? Yeah. Okay. So now when it comes to any type of risk, we have also understood that the objective of the audit is what? To minimize that. Okay, so that's the objective, to minimize that. Minimize that, or you can say to reduce it to such a level which is acceptable to him. Now, what is acceptable? Of course, acceptable is one through which the auditor can feel comfortable while issuing the audit opinion. Okay, so that's how you will say that auditor is feeling comfortable about it, or that's how the auditor will also be looking at the approach. Now the first question arises that if we have to look at this inherent risk or the control risk, now what should the auditor do? Now this is where the risk assessment is required to be done by the auditor. If you remember, in the previous session, we talked about some of the areas which you call as significant risk, not so significant risk. Remember, we talked about it. In relation to those areas which you call as significant risk or not so significant risk, what will happen? Can you tell me what will happen? Over to you. Anyone? Quickly. What will happen when the auditor will do this assessment of significant risk areas, not so significant risk areas? So how will he go about it? What will he do? What will be his action plan? Anyone?
He can do more audit procedure on the significant risk. He can plan in that way. While doing the planning only, he can do more audit procedure on that.
Right.
Like that. Significant risk is the risk that is impacting financial statements, which is more impacting the financial statements.
Right.
Accordingly, the audit plan will be there and execution is also done. And reporting also will be done in a true and fair way based on the audit procedure.
Correct. So you can say, to begin with, okay?
Yes.
That first of all, what is going to get impacted on the part of the auditor? Extent of testing. Do you want to say something?
No, sir. Carry on.
Yeah. So now, first of all, the extent of testing is going to get impacted. Or you can say that will be decided by the auditor on the basis of such type of assessment. So that's first. And we also discussed that it is quite relevant. Why? Because the auditor cannot be looking at each and everything. So that's why auditor should focus more on those areas where the risk is high and not focus much on those areas where the risk is low. Yeah, which you also call as risk-based audit. Means focusing on higher risk areas. Focusing means extent of testing to be increased, to be kept higher in those areas where the risk is higher, and extent of testing to be kept lower in those areas where the risk is lower. Correct. But the question arises that, of course, the auditor can look at the extent of testing. He can always focus on higher risk areas. He can always focus on, he can decide to focus less on low risk areas. But how will the auditor get onto this assessment of what is a significant risk area and what is not so significant? Yes or no? Because primarily that is what the auditor is required to do. Or you can say that is going to be the first step. That is how the auditor will be able to move further on this activity. Correct? Yeah. So that's why it becomes very important. So now let's try to get on to that assessment. Now, what do you do? All right. So anyone, if you can just try to attempt this, that if let's suppose there are a lot of areas, okay, let's suppose we are looking at the financial statements. How will you decide as to which areas are the ones which have got significant risk and which areas are the ones which do not have significant risk? Yes, anyone, any thoughts? Quickly.
Sir, we can decide based on the nature of the business.
Okay.
We can decide. See,
if you want, you can also take an example and you can discuss with the help of that example.
Okay. Say example, if the company is involved in manufacturing activities, say
Okay.
example for sanitizer.
Okay.
See, in that case, the risk is that the purchase of item and the sales of that items is where they are procuring the material is the risk that we
Right.
have to check it out. The reason is
Okay.
that whether there is a competitive price, say example on the vendor selection, whether they implemented three vendor at least on board.
Right. Right.
So they have to always, whenever there is a price changes also, they have to go back and get the things always alternative on board.
Right.
See, if not the case, then there is a price manipulation will happen actually.
Right.
See, when there is a other vendor is selling, the price is got reduced to the extent due to
Right.
the economic or something. Then if
Right.
they are getting the product on the higher rate means, then
Right.
there is something wrong.
Right.
Also on the revenue part as well.
Okay.
The revenue part, when the selling price is, they are
Right.
still they are selling lower price when the demand is high.
Okay.
There is also question will arise.
Okay.
So that when we are comparing from last year to current year, why the revenue is not increased such high?
Correct.
We have to look the comparative manner and we have to put lot of effort on that, selecting more samples and testing on the further audit procedure, and although deep analytical procedure we need to do.
Correct.
Likewise, the situation will vary from nature of business to business. It will vary.
That's correct. Absolutely correct. Now, I think you have nicely explained as to how do you get onto this assessment of what is significant and what is not so significant. And this is what you call as risk assessment. Understood? So I do not want to bring in a lot of technicalities to this concept. In a very simple terms, what is the auditor trying to look at? He's trying to find out the focus areas. In a very simple manner, we can say that. Means where should he focus more? Wherever he will decide I'll have to focus more, what do you call it as? The one which will have a higher risk. But the question arises, how will he get to know about it? So the management is not going to come and tell the auditor that you focus more on this. Yes or no? Because even if the management does that, it will not be appropriate on the part of the auditor to follow that blindly. Yes or no? Why? Because the auditor is expected to be independent. He needs to do that independent valuation. So that's why, to understand what is going to be a focus area will require thorough understanding of the processes of the entity. Why? Because when he gets to understand the processes, let's suppose a complete process he has understood. Okay, he has spent maybe 2 to 3 hours in terms of understanding each and every aspect which was involved in that process. Once he would have done that, what will happen? He will get a clarity, okay, to a great extent about what? About what can go wrong. About what can go wrong. Yes or no? Now, when he will get to know as to what can go wrong, so against all of these, what can go wrongs, what do you call it as? Risks. As an auditor, now he will think about it. Let's say, for example, procurement, inventory, conversion, valuation, all of these processes he has understood. And he found that there are rough areas within this inventory valuation itself which are prone to errors. So that's why, what will he say? There are a lot of risks. Will there be controls in relation to those risks? That again he will get to know through that understanding of it. Okay, so he'll not be only getting to know about what can go wrong. He can always be, or he will always be getting to know as to what are the controls which the management would have put in place. But despite that, because the risk will be quite higher, so that's why auditor will now decide that because this is one area which in terms of volume is quite significant, which in terms of amount is quite significant, and which is also subject to a lot of risks, whether the controls are put in place or not. This is something which becomes important for me as an auditor. Yeah. So that will therefore become the basis. There is no other basis except for this. So once again, we cannot have a checklist that, okay, for each and every option, auditor should have 40 questions. Once he answers that, then he will compute the weightage, or maybe he will give some points. And on the basis of that weightage or the points, he will decide that this is a focus area, this is not a focus area. No, that cannot be done. Yeah, that cannot be done. So that's why, what is going to be the activity on the part of the auditor? To obtain an understanding. And that's how he will get onto this risk assessment. Okay. Now, once the significant risks are identified, let's suppose for the financial statements, let me just once again put down both of them. Say significant risk areas, not so significant risk areas. Both of them have been put down. Okay. Now, before that, in fact, and of course, after that also, there's one more point which the auditor will have to check. What is that? That is about controls. Okay. Now, I think, talked a lot about risks today, but the controls, or you can say this entire control system of the management, is also important to be looked at. So let's try to understand as to why is that important and how is this going to help the auditor. Okay, now let's suppose there are two entities, A Limited, B Limited. Okay. Size of both the entities is similar. Let's assume. Okay. In terms of size, you can say turnover, okay, more of profitability, the way their operations are structured, right? And in terms of the organization structure, okay, so there are a lot of similarities which you find as an auditor in case of both these entities. But when you look at the controls, so what do you find? Systems, processes of A Limited are quite strong. Means whenever you have to get any work done, there's a proper system, okay, or there's a way the things are required to be done, which you do not find in case of B. B is also operating effectively. Okay, so as far as operations are concerned, so as we discussed, both of them are quite similar in terms of the size. And we are not saying that the financial performance of B is getting impacted by not having some systems in place. Okay. So as far as financial performance is concerned, that is again good on the part of both the entities, or you can say sort of similar. But when it comes to entity A, with the systems or with the strong systems in place, with the controls in place, if let's suppose you were to audit both the entities, A Limited and B Limited, you were to audit both these entities, where do you think you will feel more comfortable as an auditor? So that's the first question. And where do you think your extent of testing is going to be higher as an auditor? Over to you. Any thoughts? Quickly. Any thoughts?
See, auditor will feel more comfortable comparatively in A Limited, and will have a higher testing in B Limited.
And why do you think that auditor will be more comfortable when it comes to A Limited? Because despite the fact that the financial performance of both the companies is similar.
Because he finds that there are systems and processes are there in place in A Limited.
So how does it help the auditor? Can you tell me?
He can see that there is a system of checks and balances in place in the organization.
Right.
Due to the right processes being there.
Right.
And the fixing of responsibility and accountability is there in this system,
right.
in the entity. Right. And whereas B is not having such system in place, So there can be scope for manipulation despite the high performance in both the entities, financial performance.
Okay. Anyone else who would like to add to this?
The testing procedure will be reduced for the auditor and he will be comfortable where controls are there. While it is different in B, because B is not having controls, he has to do more procedures where the time will be increased for the auditor. Time and efforts will be increased.
Okay. Now, just to add to, I think, what you have explained, what will happen in case of A Limited as compared to B Limited? We can say that because the systems controls of A are strong or they are in place as compared to B, when it comes to the financial reporting. Now, financial reporting is also a process. Yes or no? The chances of errors, or you can say the misstatements for A Limited will go down. We are not saying that the errors may not be there. Of course, they may be there. But the chances are going to be lower in case of A Limited. But when it comes to B Limited, it will have higher chances. See, to have the financial reporting same means to achieve the same turnover, to achieve the same profitability. That, of course, is one of the aspects which the auditor will consider. But as far as the errors or the possibility of errors in the financial statements is concerned, that is again one of the aspects which the auditor needs to consider. And that is what we have been talking about when it comes to inherent risk, when it comes to control risk, when it comes to detection risk. So what will happen? You can say control risk is higher. In fact, if the controls are not in place, then this risk is quite significant. And therefore, the detection, or you can say the sample selection, will have to be increased. And that's why we are saying the extent of testing will have to increase. Okay. So, when it comes to extent of testing, this will have to increase. Now, by increasing this, what is it that the auditor trying to cover? He is not only trying to cover the inherent risk, control risk, but also the detection risk. Why? Because he knows that because B's financial statements are going to be full of errors. So that's why I need to test more. I need to check more. I need to spend more time on this. But with A, I'll not be required to spend a lot of time. Why? Because their systems are such that if you get a comfort on the systems, automatically you are to a certain extent assured that the errors are not going to. But here again, the next question arises that as an auditor, how do you get that comfort? So for that, we need to understand that first of all, auditor will do this risk assessment. Wherein he is understanding the risks, identifying the risks. Okay. Then he will do a walkthrough. Now, what is the meaning of walkthrough? He will validate his understanding. Okay. So all of these things that he would have discussed, he will take a sample, not for testing purposes, but to ensure that whatever he has understood is correct or not, he will run through that complete sample. Okay. Say if you cover any topic, but you are not able to understand that. So what will happen? You will say, sir, let's discuss this with the help of an example, so that we get more clarity. So same goes over here with the auditor. So auditor will say that, of course, I have understood the process, but can you just take me through this complete process once again with the help of that sample, so that I can also validate as to whatever we have discussed is correct or not. Okay. That is when he gets to know about both risks and the controls which are in place. Okay. And what is going to be the next stage? Next stage, which will actually give him the comfort, will be about testing of controls. Okay, so the comfort that we were talking about, through which auditor will decide whether he will want to go in with higher testing, or with the higher extent of testing, or the lower one. How does this happen? Through the testing of controls. Clear on this? So that's why it's going to be an extremely important activity. Okay. Yeah. Any questions so far? Any doubts so far? Over to you.
No, sir. Clear, sir.
Okay. Great. All right. So now, moving further. We talked about internal controls. Now, internal control, again, it's a system. And this system is all about taking care of different types of risks. So that's why, what can the management do about it? See, there are a lot of things which the management can do about it, which we just broadly try to understand. To begin with, they can have policies and procedures, which you actually call as a design. Design means something is put in place to achieve the larger objectives of the organization. And in relation to those policies and procedures, the next step will be to get down to the activity level. See, there is one thing which the organization will set up at the entity level. So they will say, this is our policy, this is our policy at the organization level. Okay. Maybe this is our motto, this is the objective which the entity wants to achieve. Now, for achieving that objective, they need to do work. So that's where activity level understanding will be required. So when you get down to the activity level, what do you do? For the activity level, we'll have to understand the risk control metrics. So there's a document which is prepared by the management. What do you call it as? Risk control metrics. So now in that risk control metrics, what will happen? I'm just trying to look at if there is anything around that risk control metrics. Otherwise, we can get onto one file wherein we can just try to look at all of those aspects. Now, in relation to the risk control metrics, let me just get onto a working file. wherein we'll just try to understand about this risk control matrix. Okay. Now, for the companies, you may have seen that generally they prepare a document which is called as RCM. Okay, very commonly prepared by the companies, and it is also documented. To a certain categories of companies, this document is something which is mandatory. Means they are necessarily required to have that in place. Now, what is this RCM? And how will this help the auditor? RCM is all about risk control metrics. So let's suppose for payroll, when the management would have set up a system, so the management must have identified a lot of risks. Yes or no? Yeah. It's the management who would have done this. And against those risks, management must have also set up its controls. So you can say there is a mapping. It's a one-to-one mapping. That for every risk which is identified, a control has to be in place. Yeah. Now, is it necessary that for every risk there is a different control? No. Maybe one control is able to take care of various risks. Okay, so it's not necessary that individually there has to be one risk, one control. Yeah, but it has to be ensured that each and every risk is taken care of. Now, as an auditor, what do? This is what you obtain. This is what you try to audit. And with the help of this document, you will plan your control testing. Now, once the controls are tested, now there again, there are two aspects. One that you call as design and second that you call as operating effectiveness. Now, what is the meaning of that? Let's suppose organization put down some policies, some processes. Okay, it's all documented, available in the entity's premises. But as far as their implementation is concerned, that has not been done. That's only a document. That's only a document. But practically on the ground, if you look at, nothing has been implemented. Okay, that has not been implemented. So therefore, in that case, what do? You will say the controls do not exist. Yes or no? But the design exists. Okay. So that's why for the controls, both the things are required to be looked at: design and operating effectiveness. Important part is what? They are operating in an effective manner. Because if the design is there, but they are not practically implemented, sort of, then what do you do? How does it help? Does it really help? Answer is no. Doesn't help. Correct? Yeah. Next. If let's suppose you have tested the controls, I think something that we were also talking about, two outcomes are possible. Either the controls are operating in an effective manner, second one, controls are not operating in an effective manner. Yes or no? Yeah. Either they must be operating in an effective manner or not. Now, on the basis of this outcome, what will happen? On the basis of this outcome, auditor will plan his substantive testing. Why? Because this substantive testing, in terms of its extent, will increase or decrease depending on whether controls are effective or not effective. Clear? Understood the flow as to how the things have to flow, as to how they have to move in a particular manner? Everyone, quickly.
Yes, sir.
Yes, sir. Perfect.
Clear, sir.
Okay, very good. Now what we will do is, I'll pick up some questions, I think. With the help of those questions, let's try to understand all of these aspects related to risk assessment, internal control, and also about the materiality. Though on the materiality, we'll just try to get some more insights as we move further. So let us just move on to some of the questions now. All right, so let's look at this one. CA Kavya has been appointed as statutory auditor of XYR Infratech Limited, and it's the financial year 24-25. Company operates in two business segments. First is consumer electronics division. Okay, and this is about the manufacturing of smart TV. Profits are stable over here. Okay, the other segment is about infrastructure development division, which is engaged in metro rail projects. Okay, and in this case, what do you have? These are the government contracts. Okay, so that's the understanding. These are government contracts. And if you look at the infrastructure division, this has reported operating losses in the past 2 years due to delays. Number one, delays in terms of completion and cost overruns. Of course, when you delay, cost overrun this is naturally going to happen. Now, while planning the audit, CA Kavya needs to determine materiality for the financial statements as a whole. Okay, She seeks guidance on the factors that may affect identification of an appropriate benchmark and the benchmarks that may be applied to each division. Okay, so now over here we need to understand determination of materiality. I think materiality is not new to us. We have already talked about materiality in the previous session. But as regards its determination, let's try to understand. Now, what is materiality? You can say it's nothing but a threshold, which is looked at in quantitative terms as far as its determination is concerned. Of course, qualitatively, you will look at a lot of transactions. You will also be considering as to qualitatively which all transactions are there, what is important, what is not so important. But as of now, when it comes to the determination of materiality, so determination will always be in quantitative terms. Okay, now when it comes to the materiality or this threshold to be determined, what does the auditor need? You will need some basis. Why? Because we are looking at a number. We are looking at an amount. So you need some basis to determine the materiality. Now the question arises, what should that basis be? So there are a lot of benchmarks which are available. One of the most common benchmark which is used by most of the companies, I mean to say the auditors. Okay, so of course by the company it's the audit side only, is the profits. Okay, most commonly used. But if let's suppose you talk about a company which let's suppose reported 5 crore profit in 1 year, say 9 crore in second year, say 7 crore in third year, say 10 crore in fourth year, do you find stability in the profits? Answer is no. So that's why in this case, even though the company is having profits each year, standard requires that the benchmark should be the one which is stable. Okay, year on year, it should not be fluctuating, because this is going to have an impact on the audit process as a whole. There are a lot of things. For example, our opinion is based on materiality. Sample selection, okay, that you do is based on materiality. So this is going to impact the financial statements as a whole. So that's why this sort of variation should not be there. So we are not saying that profit should not increase, they should remain same. So maybe some sort of trend should be there. But to say profit going up, going down, going up, going down, that is what you call as is not stable. So if the profits you don't use as a benchmark, then where do you go? You have some other benchmarks also available. You have revenue, which you can consider. Again, the similar thought process has to be there. Stability. Okay, total assets, net worth. Yeah, so a lot of benchmarks are available. One has to always evaluate the kind of industry it is, the nature of business it has. Yeah. On the basis of which you get on to the determination of material. So that's one. Further, within the term materiality or in relation to this materiality, another term is also used, which you call as performance materiality. Can somebody explain what is performance materiality and how is that different from materiality? Over to you. Anyone can explain this?
Sir, performance materiality is the amount which is less than the materiality level.
Okay.
Said by auditor.
Sorry?
Said by auditor, sir. Determined by auditor.
Okay.
Where if any mistake fall within the performance materiality, sir, it is acceptable.
So I couldn't understand except for the fact that you mentioned that performance materiality is an amount lower than materiality. So that part I could understand. Other than that, what will you say is there in terms of difference between these two? And to begin with, if you can just explain this concept of performance materiality. See, the concept of materiality we have discussed in the previous session. Today also, we have discussed this. What is performance material?
So performance materiality is the operational level, means how the process is working. In that way, performance materiality we may consider. And while coming to materiality, it comes to volume and the monetary terms, how the transactions are. In that way, I may consider.
Okay. So can you take an example and discuss both materiality and performance materiality?
See, if you consider a process, payroll process, for example.
Okay.
So in that payroll process, how the transactions are going, means how the transactions are there, how the internal controls are working, in what way any risk is there, in that how the performance is going on.
Yes.
What do you say? Considering all the process and checking all the process and how the process is working is the performance. If there is any errors, finding that shows the performance materiality that we can consider. If it is okay, that process is working well, then it is okay. So I'm
okay.
Well, coming to
and if you can just take the similar example for materiality in terms of payroll.
Payroll, wherever the transactions are means wherever the transactions are not working well, means it is any amount is misleading like that, then it comes under that materiality concept that we auditor can concentrate on that, sir. And volume, wherever there is leakages of money, means salaries like that, auditor can consider that.
Okay, good. Anyone else?
So materiality is overall general level at the organizational level, we fix it.
Okay.
And then at the performance level or the operation level, we find, for example, say there are related party transactions.
Correct.
And in that area, we will fix a lower performance materiality to get over the chances of errors, frauds, and risks to determine that. Or in some other aspects also. That we can fix a lower threshold in respect of performance materiality to reduce the further reduce the chances of errors because of the what we have found out during the performance.
Okay. Anyone else?
Sir,
Alright, so yes.
sir, materiality, the overall, in the entity level, we will fix the materiality. That is, we will fix the materiality threshold. While we are performing the materiality performance used in the audit planning, actually based on that materiality. Say example, the materiality is fixed. Say example, revenue is 100 crore. The profit is 10 crore.
Right.
See, if you set as a materiality is 5%,
yes,
on the it will come if 50 lakhs is the materiality.
Okay.
See, in this case, if the misstatement, if it is 60 lakhs, it is material because it is exceeding the 50 lakhs threshold what we fixed.
Right.
In case of the performance materiality,
yes,
see, we materiality fixed 50 lakhs.
Right.
If it is, say example, performance materiality is 75% of materiality, say example.
Okay.
If it is, say example, 35 lakhs or 30 lakhs, it is a lower the threshold.
Okay.
The small misstatement. See, this is what the difference between that the materiality and performance materiality.
All right, good. So I think let's try to understand this materiality and performance materiality first of all. And let's take an example for this. We have already talked about audit approach. You all understand that the auditor is only only required to obtain reasonable assurance. What does it mean? That auditor will do the testing on 100% basis. And we discussed that if the auditor will not do 100% testing, then there is a risk. Detection risk is there. That some of the samples he will not test may have errors. But what can the auditor do about it? Should he start checking 100%? Answer is no, he can't do that. And that is something we also discussed he is not supposed to do. Now, how do you deal with this problem? There's a problem or not? So within a population of 100, this is what the auditor has tested. So whatever he would have tested, he will be comfortable that now for this part, errors are not there. He has also looked at the sample. He has selected the sample, okay, which is representative of the entire population. So you can say that by checking this sample, he is trying to obtain the comfort over the population. But still, it may happen that this population contains errors. So despite his testing, if this error remains, what do? You do nothing. You understand that, again, you can say it's something which is inherent to the nature of audit, because that's how the audit is required to be done. Now, for taking care of such type of risk, you have this concept of performance materiality. So let's suppose for a company, materiality amount is 1 crore. Say you determined the materiality and the materiality came out to 1 crore. Now what will happen? Any error or accumulation of errors which crosses 1 crore, you will call it as material error. Yes or no? But all of those errors are which one? All of those errors are the errors which the auditor has been able to identify. But what about those errors which the auditor has not been able to identify? What do you do about it? So auditor will give himself a cushion for those errors. So what will he do? He will, let's suppose, give himself a cushion of 30%. He'll say, instead of 1 crore, what I'll do is I'll consider 70 lakhs. Why? Because remaining 30 lakhs is the room which I'll leave for which errors? For the errors which are there in the population which is untested. Okay. So this 1 crore is what you call as materiality. And this 70 lakhs is what you call as performance materiality. So it's not about performance, operations. Some of these points I think you were explaining. Okay, so that's the concept. So this is the cushion. So what is the difference between these two? The difference between these two is only about a cushion which the auditor will provide to himself. In respect of what? In respect of these errors. Okay, in respect of these errors. So once again, we are not saying that these errors are necessarily there, but they may be there. That's why auditor is giving himself cushion. Now the next question rises that what is going to be this cushion? Should this be 30%? The answer is no. It can be 10%, 15%, 30%, 40%. Again, it depends on the auditor. It depends on the comfort level that he will have. If the auditor is more comfortable, he understands that the chances of error are lower in the organization. Generally, you do not come across errors. Generally, you find the systems are strong and the financial reporting is correct. Audit adjustments are very few. So therein he may want to reduce this cushion. But wherever he will believe that no, management is prone to errors. Okay, their financial reporting is a big problem. Every time we audit, we come up with a lot of adjustments. So therefore, he will have to give himself more cushion. Yeah. So this cushion, as we discussed, it's a range which is required to be looked at. Okay, it's a range which he will consider. Okay, it's not again something fixed. This will again vary. It's quite judgmental. See, some of these things are quite judgmental. It's on the part of the auditor to consider. Okay, and there's one more concept related to materiality. Let's talk about it. That is called as clearly trivial threshold. Very commonly, this is called as CTT or de minimis. Can somebody explain if you know about this trivial? What is this trivial? Okay, as I told you, very commonly this is called as trivial, CTT, de minimis. Anyone? Tell me quickly. What is this clearly trivial threshold? Any thoughts? No? All right. So now, see this clearly trivial threshold, you can say, is the lowest level of threshold. Say, for example, 5% of materiality. Once again, it's a range. And this is again judgmental. Let's suppose this is 5 lakhs. When you audit the financial statements, there are a lot of areas you'll audit. And during the audit, you come across a lot of errors. Say, for example, depreciation you checked, you found an error of 20,000. Payroll, PF calculation you checked, you found an error of 1,000. Some of the salary computation you checked, you found an error of 500 rupees. A lot of expenses you checked, everywhere you were getting some error of 100, 500, 300, few thousands. Now, as an auditor, can you get on to each and every such error and get that corrected? Of course, you can ask the management to do that. But is that really required to be done by the auditor? Answer is no. The answer is no. See, auditor need not focus on all of these small ticket items. Anyways, we have discussed that the auditor needs to focus more on which areas? Which involve high risk. So similarly, if there are some very small items, very nominal amount, and if there are some errors of small amounts, what can the auditor do? Auditor can simply ignore that. Why? Because even if you accumulate that, that is not going to be a significant amount. Yes or no? Yeah. Now, for getting down to this lowest level of threshold, you need some basis. Here again, you need some basis or some threshold. What do you call it as? Trivial. Clearly trivial threshold. Okay. Now, clear on all of these terms?
Yes, sir. Yeah. Clear, sir.
All right. So now let's go back to the example we were discussing. Now, can you help me as an auditor of this company, or can you support CA Kavya in determination of the materiality for this company? Over to you. Your thoughts, please. Over to you.
Sir, in this case, that as you clearly explained the process of that materiality, performance materiality, threshold of materiality.
Right.
See, Kavya in this case, she seek guidance on the factor that maybe affect the identification of an appropriate benchmark, and the benchmark of that may be applied to each division. See, here the benchmark, here the clearly on the case number 1, consumer electronic division that manufactures smart television and earn stable profit.
Right.
See, here they are manufacturing and selling, and they are getting profit out of it.
Okay.
So here we can say benchmark as things is that the sales is a benchmark.
Okay.
And the cost also we can say as a benchmark because it's a manufacturing activity, and also we can put a profit as a benchmark.
Okay.
These are the three things that's come to my mind. And with respect to the infrastructure development division engaged in metro rail project under the government contract. See, I think they are putting some project for the infrastructure development, maybe building development or some project like that.
Right.
So there also the cost is involved.
Okay.
The contract also is fixed for the contract revenue. Maybe the percentage of that, based on the percentage of the cost, the revenue will be recognized based on the estimated revenue and estimated cost basis. So here also we can take it to the cost as a base and also profit as a base based on the recognition.
All right.
See, for considering the both, but the for both division is one company entity. Say example XY, or in this case is the both division. Finally, we will prepare the financial statement for overall financial statement.
Right.
So the overall the materiality will be fixed for this case.
Right.
And based on that, and the performance materiality can be fixed for the consumer electronic division, one performance materiality, and the infrastructure level there is another materiality can be fixed, materiality for the performance materiality, the limit, which is we have to decide. See example, it is based on the risk and risk, based on the that inherent risk and control risk, then the detection risk, all considering the fact the performance materiality can be differ from the point number consumer division and the infrastructure division.
Right.
So accordingly, say example, overall performance, if you are fixing is 50 lakhs is a overall performance, overall materiality, that main materiality is fixed for the company as a whole is 50 lakhs. In the consumer division, say example, is a 10% lower than the materiality, which means 45 lakhs can be fixed. And if it is a risk is more, detection risk, inherent risk more on the infrastructure development, say we can consider 20% as a performance materiality.
Okay.
In this case, the 40 lakhs will be. And we can also, the benchmark for the common things is that we can do the cost, sales and profit for each both categories.
Right.
And accordingly we can fix the trial threshold. Say example, 1 lakh in case of the consumer electronic and 2 lakhs in case of the government infrastructure threshold, the trial threshold, for which we cannot check. But however, if the particular item cost is exceeding the threshold, the trial threshold, we can review at the later stage whenever we have that evaluate in the later stage.
Okay.
Accordingly, we can go on to verify the materiality to minimize the material misstatement and to for these cases. This is what I could infer from our discussion, sir.
No, that's good. Very good. Anyone else would like to add to this?
So the factors has been asked in this question. Factors that may affect the identification.
Right.
So the division one is basically having stable profits continuously and it's in manufacturing and consumer electronics division and basically moving smoothly. So whereas in the second infrastructure development division, which is engaged in government contracts and is reporting operating losses, and there are delays and costs. So the level of materiality will be different in both these divisions. Because of the stable nature, the being involved in the consumer electronics market, the materiality level may be lower in case of this division. Whereas in case of infrastructure development, because of the nature of the project and being involved in the government contracts and due to the operation losses and heavy costs, the materiality will be higher to understand the to understand these losses and to give a correct and true opinion on these.
Right. Okay. Anyone else? Any more thoughts on this? No? All right. So I think we can just look at this now. Let me just move on to the solution. So if you look at the fact pattern, okay, in this question, I think we will not be able to talk about the amount, because nowhere in the question we are given an understanding about turnover, profits. Means the amounts are not there. So it's only the discussion around the benchmark and the factors that we can do. But we cannot pick up a benchmark and compute some of the compute some of the amounts and then discuss. That will not be possible. Correct? Now, what are the factors you will consider? The factors will involve, of course, the financial statements to begin with. Okay, some of the qualitative factors, nature of business, okay, structure of the entity, and the benchmark, of course. Right? Now, when it comes to a company like this, which has got diversified business, yeah, so they are doing consumer electronic manufacturing at one place. At the same time, they are also into infrastructure development. And the objective is what? Objective is to get on to the determination of materiality at the financial statement level. Now, because the nature of business is different for two different divisions, so that's why what they can do is, for the electronic consumer division, they can always look at PBT, because that's the first and foremost consideration, provided it's stable. If you look at the fact pattern, we understand it's quite stable. So there's absolutely no problem if you pick up that. But I think when it comes to infrastructure, that is where PBT becomes a problem for us. Yes or no? So PBT cannot be picked up because the company has been into losses. Now, after PBT, where do you go? After PBT, you have a lot of benchmarks. The revenue is one. Total assets. Okay, net assets at times you can consider. One again needs to evaluate, okay, which is more of a professional judgment. Right? So in this case, of course, you will ignore the profits, but some of these factors which you will consider will involve consideration of revenue, total assets, for the consideration of materiality as far as the second division is concerned. Clear? Yeah?
Yes, sir. Clear, sir.
Yes, sir. Perfect.
All right, perfect. So I think we've got some more questions to discuss, but before we move on to that, I think we can take a break now. Yeah. And then let's continue after the break discussing further questions.
Yes, sir. Clear, sir. Thank you.
Sure. Ashok, let's take a break now. So now,
Sir, one clarity. Actually,
yes,
in the last case, what we studied in the CAVIA relating to benchmarking,
right.
I initially thought that the benchmark mean the process to be benchmarked with the other processes as well.
Okay,
So in this case, the benchmark has to be evaluated on the independent case.
correct.
So my assumption was incorrect earlier.
Yes, you can say that.
Yes, sir. But based on that, my assumption only the benchmarking means what is the benchmark? If you are, whenever we are using some benchmark, the same thing we will replicate to the other process as well.
No. See, materiality is a different thing, and other audit procedures are a different thing. So when it comes to the benchmark, let's try to understand what's the meaning of a benchmark. In terms of materiality, you are looking at an amount. So what is your objective? You want some amount. Okay, some threshold you want to derive. So if you are to compute some amount, you need some basis. You will say, I'll pick up, say, 5% of profits, 5% of revenue, 5% of total assets, 5% of net assets, 5% of borrowings. Okay. Yeah. So all of these bases that you can consider, what do you call them as? Benchmarks. Now, are you free to go to any benchmark? The answer is no. What should be the ideal thing? Profits. Ideally, you should be looking at this computation based on the profits. But what if the profits are unstable? Okay. So let's again understand that. Say, for example, in a particular year, profit of the company is 10 crore. And you pick up 5% of the profit. So in that year, what will be your materiality as an auditor? Tell me.
5% of the profit value.
Right. So what is going to be that amount? Tell me. 50 lakhs?
Yeah, 5% means it's a 5 lakhs. Sorry.
No. So I'm saying 10 crore. Profit is 10 crore, 50 lakhs.
Oh, 50
Okay.
lakhs.
Now, next year, for the same company, let's suppose the operations are similar. Revenue is also similar or has increased slightly. But its profit has gone down. Now it is 7 crore. So now what do? You pick up 5%. What does it become? 35 lakhs. Now, in the first year, you are considering higher materiality. In the second year, you are considering lower materiality. So if you consider lower materiality, what does it mean? Will increase your procedures. The more and more errors you will consider for your reporting purposes. Now, will that be appropriate? Answer is no. Answer is no. So that's why there has to be a stability. And that's why we say that the benchmark that you use, you should be looking at the one which is stable. Okay. So that's the understanding of the benchmark. And that's the understanding of the basis you will follow for selection of benchmark. Now clear on this?
Yes, sir. Benchmark based on the element of the financial statement. Say example,
Correct.
asset or the liability or expenses or income, profit.
No. So you can't pick up each and every element. So again, some benchmarks are defined by auditing standards, as we discussed. Yes, you can't say printing and stationery I'll keep as the benchmark. Any expense I can keep as the benchmark. There has to be some basis. Okay, so the benchmark should be the one which can give you or throw some materiality threshold which you are going to apply to the financial statement level. Understood?
Yes, sir.
Yeah. Okay, so that has to be the benchmark. You can't say that I'll pick up other expenses as the benchmark. Why? Because materiality is for the company as a whole, which will apply to the financial statements as a whole. Okay.
Right, sir.
Sir, it is possible that accumulation of all CTT is more than performance threshold, sir?
Generally, it will not happen. But of course, you will look at all the errors at an accumulated level. If they are crossing materiality, that is what you call as material misstatement. But generally, it doesn't happen. Huh? And anyways, see, this CTT is a very small amount, minuscule amount. So all of these small errors, you will not be looking at as an auditor, right?
Okay, sir. But if more than threshold, then we have to check. We have to correct it.
Of course, you'll have to correct it. But the only thing is that if, let's suppose, that has to exceed the materiality,
okay,
then it will mean that the company is full of errors.
okay,
Then it will not be one error. It must be hundreds of errors. Only then it will reach the materiality threshold. Correct? Which in itself will be a big problem as far as financial reporting is concerned. As far as the controls, processes, systems, we'll have to look at that. Okay.
Okay.
Because if you are getting some errors, even if that is of small amount, but the volume or the quantum of error is too high. So that means each and every transaction that you come across, you find an error. So your comfort as an auditor will go down, and thereby you will have no option but to increase the extent of testing.
Yes, sir.
Yes or no? That's how you'll have to approach the audit. Correct?
Yes, sir.
All right.
Yes, sir.
Anyone else? Any more queries? No? Okay. So let's look at this one now. CAR is conducting statutory audit of divisional office of a PSU insurance company. On going through the delegation of powers laid down by the head office of the company, it is noticed that surveyors in claims under the property insurance policies beyond the estimated amounts of 30 lakhs are to be appointed by divisional claims committee. However, on going through surveyor appointment details of 10 such claims during the year, 5 instances have come to the notice of the auditor where above delegation of powers has not been followed. And what had happened? These appointments were made by divisional manager in place of divisional claims committee. In the beginning, auditor had assessed risk of material misstatement to be low. Describe why the above finding would change assessment of the auditor in relation to the above. So it's all about risk assessment. It appears that when the auditor started the audit, his risk assessment as far as this particular area is concerned, that was low. But now I think the question again, okay, so these type of questions, I think you should pray you get these questions in the exam. Why? Because partly the solution is available in the question itself. Okay,
Yes,
so the
sir.
question is helping you. Question is saying that as an auditor, you need to change your assessment.
Yes, it's clear.
Yeah. The only point is now you need to just, sort of complete the solution. Yes, over to you.
Question should
Why
have
the
been,
above finding would change?
do you need to change the assessment?
Yes. In fact, the question should be not about do you need to change or not. How will you get on with this situation as an auditor? Okay, therein I am just keeping you in dark completely for your thoughts to come out. Yes or no? Yeah, but if you have a question like
Yes, sir.
this,
Yes,
You
sir.
already understand the direction which you need to follow. So partly it's answered in the question itself. But anyways, it's good if you get these questions in the exam. Yes, over to you now.
Sir, actually in this question, it is very clear that there is a control risk.
Right.
Which means the risk of misstatement relating to the controls risk. We need to put more process and revisit the design and audit plan regarding to
Right.
the internal control assessment.
Okay.
We need to be revised, and
Right.
we need to put more testing of the internal control to
Okay.
bring the risk of material misstatement as a low levels.
Right. Anyone else would like to add to this?
So, the control at the designing level that the are proper in place, but he finds that at the operational level they are not working because
Right.
these policies and procedures have not been followed. So
Correct.
this becomes a high risk area for the
Correct.
auditor. When out
Correct.
of 10 such claims, 5 instances have already come to notice.
Correct.
So that means a 50% violation is there of the
Right.
policies, and
Correct.
this assumes a higher materiality risk, and this requires an auditor to revise his estimate, and instead of assessing the low performance materiality, he'll have to revisit his materiality and put it at a higher risk of material mistake would be there.
Okay. Anyone
And
else? Yes. And I think you
Yes,
wanted
sir.
to add to this. Yes.
Yes,
and
sir.
apply more procedures to more audit procedures, substantial audit procedures.
Okay. So you can say that extent of testing he'll have to reconsider. Huh?
Correct. Increased.
Correct.
Yes, sir. We need to the modification in the extent of nature, timing, to the extent what we have planned, and the substantive procedure also to be increased.
Okay. So now in this case, I think it's clearly evident that as far as the controls are concerned, they don't seem to be operating in an effective manner. Yes or no? The moment you come across this situation, what will happen? You'll say the controls are weak or they are not operating effectively, and thereby your substantive testing, or you can say your audit approach, will have to change. Why? Because now the risk of material misstatement will automatically increase. So if that risk increases, that will have an impact on your substantive testing audit procedures. Yes or no? Yeah. All right. So now
Yes, sir.
moving on to next one. Just a minute. RK Living Limited. This is engaged in the manufacturing and processing of textile fabrics. It purchases its raw material from a company based in Silvassa, which is taxable at 12%. Okay, so that's about the raw material. It takes about 3 to 4 days for the raw materials to reach the company's plant. Recently, company has revamped its internal control system for recording its transactions. Okay, that's good. So there is a revamping of internal control system which has taken place. You have also assumed charge as head of internal audit department of the company a few days before. So it's about internal audit, I think. It is noticed that the information system requires booking of purchases in the purchase ledger and stock records from the date of purchase invoice only. How would you deal with the above matter as the internal auditor of the company? So I think somewhere over here, you need to carry the perspective about the management. Okay, so that's why you are getting more of this perspective from the internal audit side. Yes, over to you. In this case, what do you do? Quickly, over to you.
Sir, the internal control, purchase ledger and stock record. See, here the question is that purchase invoice date of purchase invoice only they are recording.
They have to record. If you look at the system, the way the information system requires, okay, the booking has to be done from the date of purchase invoice only. But when do you get the purchase invoice? I think there's a lag of 3 to 4 days. That seems to be the case. Yes or no? Because when the goods will reach the plant, you will expect that is the time when the invoice will also reach. So maybe that's the context. Yes. Over to you. So now in this case, what do you do? Yes.
Sir, which means that they are recording that purchase invoice from on the date of purchase.
They are recording purchases on the date when they receive the material.
Date of purchase invoice.
Okay. So that seems to be the case. What they need to do is from the date of invoice, they need to do this. I think it's very simple. Huh? Let me just put it for you. Say, now again, I'm assuming all of these points are because facts of the question are such. Let's suppose this is the date when the goods have got dispatched, 5th July. Okay. So 5th July, you will expect the purchase invoice to be generated.
Yes.
Yes or no? You expect that this is the date when the purchase invoice would have got generated.
Yeah, by the vendor.
RK Limited. Okay. When do they receive the material? 4 days.
Take 4 days.
So 9th July 2025 they receive. So when do they record? 9th July they record. If they go to their system, what does the system require? System requires booking to be done on 5th July itself. Why? Because the invoice has a date of 5th July, not 9th July. Okay, so that appears to be the case. Now,
so inventory level will be misleading, sir. So
sorry?
the inventory level of the company will be misleading.
Inventory level of the company will be misleading. What do you mean by this?
Means stock value is not correct, sir. Here, stock value will not be correct because we have not received the stock and we are entering the quantities and all, sir.
Okay. So as an internal auditor, what do you do? That's the question. Huh?
Sir, as long see the purchase payment will due from the date of invoice. The material, see the payable always is the three-way matching.
Right.
Purchase and receipt.
Right.
And based on that only the payment will happen. Without receipt, the payment will not happen.
Okay.
That is three-way matching.
Okay.
But here the purchase booking is correct, but the stock record from the date of purchase means it's not correct. Once they received the material,
Right.
that time only they can book the record of stock.
Okay.
Without receiving the material, how we can book the stock?
Okay.
That is a question.
No, that is a question, but as an internal auditor, what do? You need to give the solution also. Huh?
Yes, sir.
So what's the solution? How do you handle this? Anyone else would like to share some thoughts? All right, so let's look at this. See, in the given situation, when you understand that the information system requires booking of purchases from the date of invoice, such a control system is likely to present a distorted picture of the stocks of the company. It would show stocks of raw material as received on 5th July, if you record. So what will be the picture which the company will get to see? That on 5th of July, they have the stock. Whereas the stock would be in transit at that point of time. Therefore, design of this control which has been put in place, what do you call it as? It's faulty. So there's a lacuna in the design itself. So one is the control, which you test whether it's operating in an effective manner or not. Of course, you'll do that. But the point is the control which has been designed, which has to operate, is that appropriate or not? So it seems the control is not right. They have not considered. So when they were establishing the controls, they didn't consider a situation that it may also happen that the goods which are dispatched, they are not received on the same date. Some of the goods may take 1 day or 3 to 4 days. Okay. Now this can also have some impact as far as the regulatory requirements are concerned related to GST. We don't need to deep dive into that because it's not about GST. But of course, you'll have to comment on this, that on the regulatory requirements, this may have some impact. So in this case, as an internal auditor, what will you do? You will get this system fixed. So how do you get this system fixed? So this design error, you will have to get corrected. Because as an internal auditor, you will have to understand what is the problem. You have understood. Now, what is going to be the corrective action? So that is something management will have to take. Okay. So the corrective action, the timeline, the responsible person, all of these things will have to come out in the form of this report from the internal auditor, or this is something which the internal auditor should be doing. Right?
Right, sir.
Next, a company, as part of its internal control setup, has a system under which quarterly budgeted targets in respect of sales are analyzed with respect to actual performance achieved. Now, please remember it's quarterly budgeted targets. It also involves fixing responsibilities of different product departmental heads and taking timely correction. In case of product departmental heads not achieving the quarterly budgeted targets, they have to give detailed justification for the same and also lay down how shortfalls would be compensated in ensuring quarters. You are required to identify, explain about the component of internal control, which is sort of, covered in this scenario. Over to you. Any thoughts? So let's look at this. Above referred component of internal control is what you call as control activities. Control activities that may be relevant to audit include policies and procedures that pertain to performance reviews. Such control activities include reviews, analysis of actual performance versus budgets, forecasts, prior period performance, relating different sets of data, whether operational or functional, to one another, together with analysis of relationships, investigative and corrective actions, comparing internal data with external sources, review of functional or activity performance. Control activities, again, pertaining to analysis of budgeted target of sales with respect to actual performance. Number one. Number two, fixing of responsibilities, taking timely corrective action, falls in the nature of performance reviews. Okay, and such performance reviews are a part of control activities. Next.
This is given in the question.
What is given in the question? Sorry.
Most of the things were given in the question, now, so we just have to analyze this.
Exactly. See, when it comes to the questions related to audit, okay, in most of the places, and that's what I have been discussing quite a lot with you in the previous sessions also. See, if you try and understand this subject in a manner as if you are the auditor, if let's suppose you put yourself in the shoes of an auditor in that given situation, and you think logically, okay, forget about some of the technical requirements. Of course, in some of the questions, you'll have to get on to the technicalities also. But if you ignore the technicalities, you just try to think logically that as an auditor, what will you do? What is it that you will be required to do? Most of the questions, I believe you will be able to answer very easily. Okay, because audit is such a subject which sort of requires application of various other areas, isn't it? Yeah. So you're absolutely right. In most of the cases, you will find the solution is already available. The only aspect will be about application of that part. That's it. Okay. Next, CAS is the statutory auditor of a listed company. On reviewing internal controls of the company, he is of the view that there can be possible situations where insurance premiums for keeping insurance policies current in respect of various assets of the company may have become due and payable, but internal controls established by the company may not be able to capture it. Now, in this case, how would you deal with this situation? Please remember, you are looking at it from the perspective of statutory auditor. Over to you. So the point is, as an auditor, what are going to be your considerations? Yes, over to you, quickly. Yes, quickly, huh?
Sir, here designing of internal control is not proper, sir. So
okay.
So control, there is a control risk.
Right. So what do you do as an auditor? See, you are the statutory auditor. Huh? You have reviewed the internal controls. So there's an observation which you have. So how will you deal with that?
Sir, we have to check the policies and procedure in
So that is
relating
already
to
done. Now, please
done.
remember,
Yeah.
in this case,
Yes.
it's a listed company. Okay. So some of the points which are important for you. It's a listed company. So that means on the company, IFC reporting is applicable. So that's one. Now, to say that auditor needs to look at policies, he needs to look at XYZ, he needs to look at ABC, all of that is already done. Okay, so let's look at the requirement of the question. Is the question asking you that what do you need to check? No. Question is saying that auditor has already done the review. Okay, he has also come up with an observation. Okay, so that part is already done and dusted. So there's already an observation which is in front of the auditor. Now, as an auditor, what is your role? Your role is to resolve
report. Resolve and report
resolve or report, whatever be the case. Means you are now moving forward from this stage. So when you, let's suppose, answering the question, go back to the stage that as an auditor, I'll check this, I'll check this, I'll check this. That is where the examiner will not be happy, because he'll be thinking that this is not my question. Are you getting it? Yeah.
Yes, sir.
So you
Yes,
need to be very specific to what the question requires. Clear? Yes. Now, in the light of this understanding, I think you can now start answering this again. Yes, over to you.
Yes, sir. We need to evaluate where the error happened.
Right.
How we need to identify the weakness of the internal control.
Okay.
In the assessment level, where they missed.
Okay.
That has to be find out by way of putting the further audit procedure and substantive procedure. Then he has to identify what are the insurance policies which is due, which is not renewed.
Okay.
And then he had to report in the audit report.
Right.
And also give the solution to redraft the internal control.
Okay.
To capture the problem.
Right. What about others? Anyone else?
Sir, auditor has to address the control risks by following procedure, and auditor has to report the weakness of internal control to the management.
Okay. Anyone else? Quickly, anyone else? Okay, so let's look at this. I think, first of all, it's all about understanding as to what is a deficiency in an internal control. In the above situation, there is a possibility that internal control systems may not be able to capture insurance premiums which have become due and payable. It's a significant deficiency considering the nature of the business of the entity and considering the type of deficiency and the impact which is going to have on the item. Okay, so the line item of the financial statements which is going to get impacted because of that is critical, correct? So that's why you will call it as significant deficiency. It may lead to losses for the company in case of any eventuality, no doubt. Significance of a deficiency depends not only on whether a misstatement has actually occurred, but also on the likelihood that a misstatement could occur. Number one. Number two, potential magnitude of the misstatement. Now, that is again very important consideration for the audit. Okay. Significant deficiencies may therefore exist even though auditor has not identified misstatements. Susceptibility to loss of an asset is a factor in determining whether a deficiency constitutes significant deficiency in internal control. In this case, because it's a significant deficiency, so that's why what will happen? Auditor will have to discuss this with the management, no doubt. Why? Because it's something which is established. So there's nothing which is required to be established again. Auditor has already performed the audit procedures. It's already an observation of the auditor. So can this be undone? No. You can't undo this. Okay, if a deficiency is there, is there. Is there any element of doubt in finding whether it's a deficiency or not? No, it's clearly a deficiency. So auditor will discuss with the management, understand their thought process, will also communicate the same thing to TCWG. Why? Because it's significant deficiencies. Had it been a deficiency, it's very common. A lot of deficiencies could be there, but significant deficiencies are important. Okay. So now what will he communicate? A description of the deficiencies, explanation of their potential effects, sufficient information to enable TCWG and management to understand the context of the communication. And of course, on the basis of this discussion, auditor will also have to look at the reporting implications. Okay? Everyone clear?
Yes, sir. Yes, sir. Clear, sir.
Next. CAB, who was appointed as the auditor of ABC for the financial year 23-24, during the course of audit planning, intends to apply the concept of materiality for the financial statements as a whole. Obviously, materiality will apply to the financial statement as a whole. Please guide him with respect to the factors that may affect identification of an appropriate benchmark for this purpose. Okay, so that's one. What benchmark should be adopted by CAB if ABC Limited is engaged in manufacturing and sale of air conditioners and is having regular profits? Number two, construction of large infrastructure projects, and if they would have incurred losses in the previous 2 financial years due to pandemic. Yes, over to you. Over to you.
I think this is look like that the Kavya case,
Right.
already what we discussed.
Correct. But in this case, what do you do? If let's suppose it looks like that, so what do you do as an auditor? What do you consider? Where do you go? What do you do?
In this case, the case number 2 is clearly stating that they incurred losses in the previous 2 consecutive financial years due to pandemic.
Right.
That is one factor we need to look into it.
Okay. So that's one of the factors. What about others? What about anything else that you consider as an auditor? So you need to guide them with respect to various factors which can have any impact on your consideration of benchmarks that you select.
So in respect of manufacturing and sale of air conditioners,
right,
profit before tax or earnings can be a benchmark.
Okay.
And in case of infrastructure project, since there are losses, so in such cases, revenue may not be the appropriate benchmark. Then they can take cost or net cost or the assets as a benchmark.
Okay.
And factors in respect of identification of appropriate benchmark, the first part of the question. So he will have to look at the nature of the entity.
Right.
For identification of the benchmark.
Right.
So accordingly, he will select like if there is regularity and stability, accordingly his benchmark will be different depending on the nature of the entity and the operations.
Right. What else? Okay, so let's look at this. I think, as you rightly mentioned, this is very much on the same considerations that you had in case of that question that we discussed. I think that was RTP. Now, when it comes to the use of benchmarks, what do? Okay, some of the factors that you consider. One, of course, is the element of financial statement. See, when you write in the exam, so of course, when you look at some of these solutions, okay, some of these answers, you may have, okay, I'm sure some of you will have consideration that how do we answer this? Because we know the solution, but how do you present it? So in this case, I would suggest that the manner in which this presentation is visible, you may not be follow or able to follow that exactly in the same manner. It's not possible unless you start cramming all of these things, which is not really required. So that's why what you should do is you should always have some thoughts. So just try to put down your thoughts in a very clear manner and in an orderly manner. Okay. So first of all, the question is asking you to guide in general about the benchmarks. So that's where you start your solution. Okay. Wherein you should again have some factors. In general, you'll say, what are the general factors you'll have? Of course, financial statements you'll consider. Whether there are items on which attention of users of financial statements need to be there. Nature of the entity will always be a consideration. The industry in which it operates, economic environment by which it is affected. Its structure will also have some consideration. Volatility of the benchmark that you select, any benchmark that you select, will be one of the factors. Okay, when you answer this much, so if let's suppose this question has got 3 parts. So this is 1, this is 2, this is 3. Okay, and let's suppose it's a 6 marks question. So at least 2 marks we have assured. Understood? Yeah, so that's how the weightage will also be there. Or you can say that's how the marking will also be there. Yeah, so when you answer this in general only, let's suppose if you are not aware of these 2 specific situations. Okay, so when you answer like this, if you don't mix up everything at one place, if you put this down in a very clearly manner, wherein you are able to associate your solution to the question, then some part of the question is already solved by you, you'll get the marks. And then of course, you can be specific to the situations which have been asked. What is the first situation? Very simple one. If the company is a manufacturing company, okay, having stable profits, so then I think it's a one-word answer. What is going to be the factor that you consider or the benchmark? It has to be PBT always, without doubt. Okay, that has to be the first and foremost consideration. But and when you answer this again, you have got the marks for the second part. For the third one, wherein you understand, okay, that company is into losses, of course PBT goes out. That is where you look at other factors. Now that could be revenue, that could be total assets. Now therein you cannot be specific. Why? Because the data is not available for you to comment. Okay, so at the first place, for this situation, you have a specific information available. So that's why your answer is also specific, PBT. But for the second situation, for this infrastructure projects 1, question doesn't give you adequate information to be specific in terms of answering that. So that's why to a certain extent you will have to be generic. Clear? Next. New Life Hospital is a multi-specialty hospital which has been facing a lot of pilferages and troubles regarding their inventory maintenance and control. Okay, so there's a concern as far as inventory is concerned. On investigation of this matter, it was found that the person in charge of the inventory inflow and outflow from the storehouse, it means the person who is taking care of the store. So you can say the storekeeper or maybe the store's in charge. That person is also responsible for purchases, maintaining inventory records. Okay. According to you, which basic system of control has been violated here? Okay, so here again, that's question number 1 for you. Question number 2, also list down other general conditions pertaining to such system which need to be maintained and checked by the manager. Over to you. So there are a couple of questions. Quickly. Yes, over to you.
Sir, here the problem is the basic system of control has been violated.
Right.
The thing is that the segregation of duties, the DOD is not there actually.
Okay.
See, the person who is purchasing,
yes,
and maintaining the inventory record, the both are is doing by the single person.
Correct.
So inflow and outflow, the purchasing, it has to be handled by the separate team, and the record to be maintained by the separate team.
Okay.
So the proper approval and who is the initiator and the maker checker concept, I mean to say standard operating procedure,
right,
is not there in place.
Okay.
And we need to check whether in the IT environment is used. If the manual environment is, we can suggest for that computerized system also okay.
Right.
We are not so sure whether they are using the IT environment or not.
Okay.
So basically the internal control weakness, the significant weaknesses are there.
Right.
So it has to be corrected by the management. We need to communicate to the management, those who are charged with the governance, and also the general condition pertaining to such a system need to be maintained by, checked by the management. Management, they should have the proper internal control, and it has to be reviewed by the internal department.
Okay.
As for, yeah, this is what it has to be done on this matter, sir.
Okay, good. Anyone else? Any more thoughts on this? So I think this fact pattern, this situation is quite clear. Okay, as far as the problem is concerned, the process is involved. I think question gives you complete clarity. Yes or no?
So we are the investigator,
yes,
no?
Sorry?
We are the question says on investigation into the matter.
Right.
So are we the investigator?
See, you can consider it from the perspective of management or the auditor. if the question is silent about the auditor, you can always look at it from the perspective of management. So when you say you are involved in investigation, so that's the part of the management only. Okay, from company's side only this is being done. Okay, so there's no third party which is involved, or even if the third party is involved, that they are doing something or they are checking this on the behalf of the company only. Okay.
Correct.
All right. So now internal checks, internal audits, they are important. Internal check system implies organization of overall system of bookkeeping, arrangement of staff duties in such a way that no person can carry through a transaction and record every aspect thereof. See, that's how you will put the checks in place. One person will do the work, other person will check the work. So that is what you call as check. If the same person is doing the work, same person is then reviewing or checking that, will you call it as a check system or a review system? No. In the given case, now what is the concern? Person in charge who is looking at flow of inventory. What do you mean by flow? Means when the inventory is received by the stores and whenever the store is issuing the inventory to any other department within the hospital. Okay, so now the person in charge who is looking at these two activities is also handling purchases, is also handling maintenance of inventory records. So all of these things are being handled by one person. And who is that? Stores in charge. Therefore, one of the basic control system, what one? Internal check, which talks about segregation of duties, or you can say maker checker concept, that seems to be missing. Yes or no? Why? Because if you depute one person end to end who is looking at everything, then where do you have the maker checker? Do you have that? No. And can you have the same person as maker checker? No. If you put that as same person, then the entire concept of maker checker is gone for a toss. Yeah. So if you look at the principle, so the general condition pertaining to the internal control system, what is that? No single person should have complete control over any important aspect of business operation. In fact, generally, if you look at the entities, you can say they will not put a single person a complete control over any aspect. Forget about important aspect, any aspect of the business operation, because for the business operation, every aspect is important. Every employee's action should come under review. Means every employee who is doing any activity, that should be subject to review. So we are not saying 100% testing is required, but at least some testing of every work should have been done. Only then you will get a comfort as the management that yes, all the activities are being done in a manner which the management requires, or that is in line with the policies and procedures of the company.
Yes, sir. Also, we need to give the rotation of the job as well.
Correct. Very good.
And see, actually this problem will lead to the misappropriation of asset as well. It's lead to fraud.
Correct. Very good. That is, I think, in a way, an opportunity which you are giving to the person. Remember, when we discussed about fraud, we discussed that fraud will not take place without any opportunity. So if, let's suppose, a person has to commit a fraud, he needs to have an opportunity. When you give them an opportunity, that is when he'll move forward. Otherwise, how will he be able to commit the fraud?
This is a clear opportunity.
Yeah, this is a clear opportunity, or you can say that is where the controls are found to be missing in the organization. Okay, and some of the organizations where you very clearly see this system in place. Okay, I think banks. In case of banks, what do you find? That maybe every 6 months when you visit the same branch, do you find the same person sitting on the same chair doing the same work? Generally, no.
No, the
Okay, they
rotation of job.
rotate the persons within the branch.
Even
So the
they will not be in
cashier,
the same branch. They will move to some other
correct,
branch and once in 3 years or 2 years.
correct. Yeah, so one is the rotation within the branch, means the one person will not be doing the same work over and over again for a long period of time. Maybe after 1 year they will move, after 2 years they, whatever is the policy of the entity, that is the policy of the entity. Next, even they will not let the person become familiar to a lot of customers or to the branch as a whole. So that's why what do? They will move the person from that branch to another branch. Okay, so that's what you call as a check. Okay, in terms of various activities, when you are moving the person, even if let's suppose the checks are missing, but if the person is rotated, so any of the wrong acts which he was doing in respect of that particular job will be undone, because now the new person will come. Okay, and the previous person is gone. Yes or no? Yeah, so that's again a very important way through which such type of things can be managed. Okay, so the staff duties should be rotated from time to time so that the members do not perform the same function for a considerable length of time. Third, every member of the staff should be encouraged to go on leave at least once a year.
Okay, this
Now,
is with respect to
can you tell me how is this going to have any impact when you talk about this third point? How is this going to have any impact on the controls? How is this going to
sir,
benefit the control system?
When
sir,
he goes on leave, someone else will be sitting on his place, in his place.
Correct. So when he will not be around, of course, the responsibilities will have to be handled by somebody else. So if the person is not on leave, that doesn't mean the work will not be done till the time he is on leave. The work will have to be done. So that means somebody else will be looking at what he has been doing all this while. Yeah. So that is also a kind of check which the organization can put in place.
sir, now also it is a incentive to make that mistake. If the person is not encouraged with the leave or the right compensation, that also will
Yes,
give the, yeah.
correct. You can say that. Absolutely. Okay. What are the some other considerations you can have? Persons having physical custody of assets must not be permitted to have access to books of accounts. For example, the person who is handling cash, so the cash ledger he should not be maintaining. Okay, cash ledger should be in the control of some other person. There should exist an accounting control in respect of each class of assets. Further, there should be periodical inspection so as to maintain and establish their physical condition. For example, banks, once again, if you look at, they do the physical verification on a daily basis.
And
Okay,
also
forget
the
about periodical. On a
yeah,
daily basis, they do this.
and the concurrent auditor also they do the surprise check on the every month.
Correct. Yes, that's a separate check in place. Mechanical devices should be used wherever practicable to prevent loss or misappropriation. For example, once again, this surveillance camera, that's again a kind of control in place, check in place. Budgetary control should be exercised. So when you will have budgets, so what will happen? Okay, so any person will be restricted to that budget, because the moment you bring in the variations in the form of actuals versus budgets, that will be subject to reviews and the person will know about it. For the stock take at the close of the year, trading activities should, if possible, be suspended, and it should be done by staff belonging to several sections. There again, the idea is what? To bring in more and more people. See, collusion is not easy. Collusion, if done, is very difficult to track, but it's not easy. Okay, so that's why you are trying to bring in different persons. Financial and administrative powers should be distributed very judiciously among different officers, and the manner in which those are actually exercised should be reviewed periodically. Procedures should be laid down for periodical verification and testing of different sections of accounting records. All of these are what? Again, checks. Okay. Next, compute the overall audit risk. If looking to the nature of business, there are chances that 40% bills of the services provided would be defalcated. Inquiring on the same matter, management has assured that internal control can prevent such defalcation to 75%. At his part, auditor assesses that the procedure he could apply in the remaining time to complete the audit gives him satisfaction level of detection of frauds and errors to the extent of 60%. In this case, analyze the risk of material misstatement and find out the overall audit risk. So let's discuss this. See, about the audit risk, we have already discussed that it comprises of three components: inherent risk, control risk, and of course the detection risk. Okay. Now, in this case, overall risk is what? Of course, 100%. Inherent risk that we are given is 75. So control risk is what? 25%. Risk of material misstatement. What do you call it as? Inherent risk and control risk. So that is 40% into 25%, 10%. Chances of material misstatement are reduced to 10% by the internal control applied by the management. Detection risk is what? It's a risk that material misstatement remained undetected even if all the audit procedures are applied. So detection risk is therefore 40%. In the given case, overall audit risk can be reduced up to 4% as follows. So what is the audit risk? Of course, risk of material misstatement and the detection risk, which is 40%. So this is 4%. See, even if you have these questions wherein, some sort of these calculations are involved, practically when you get on to the audits and when you apply all of these risk assessment, etc., please remember these calculations, some of these things you are doing, these are more for the purposes of giving you some clarity. Yeah. Actually, what do you do is you get into the assessment, which is more of judgmental and which is more of qualitative rather than quantitative in this form. Okay. Now, let's quickly get on to this question also.
Sir, one more thing, but
sorry?
How these percentage are decided, sir?
No, these percentages are given in the question itself.
Then any practical life, sir, how it is decided?
No, so that's why I told you, in the practical life, you don't go by these quantitative numbers, etc. Okay, you always look at it qualitatively. You don't compute all of these things. All of these computations are for the purposes of just giving you some clarity. Okay, that this is what inherent risk talks about. This is what detection risk talks about. Okay, so that's the thing. Okay, when you do the audit, you don't do all of these calculations. Fine.
Okay, sir. Yes.
Sir, okay. Sir, actually the risk is concerned, the audit risk is concerned.
Right.
The risk cannot be zero down. The risk can be minimized to the acceptable level.
Correct. And when you say the risk can be minimized or reduced to a level or to a lower level, all of these things, please also remember this is always qualitative. This is not quantitative. Okay.
Yes, sir.
Yeah. So I think we can just quickly run through this situation also before we wind up. Huh?
Yeah, please, sir.
While assessing the impact of uncorrected misstatement in the audit of this company, Mini Builders, Gautam encountered a significant issue related to calculation of materiality on revenue. Initial materiality calculation was based on estimated figures. Okay, management to estimate full year revenue they extrapolated the sales, okay, which is fair 11 months to 12 months. However, given the nature of the company, where monthly sales exhibit substantial variations, a unique challenge emerged. Actual sales for the last month deviated significantly from the estimates. Okay, because there was a slowdown. Okay, as a result, last month's actual sales represented only 30% of the estimated sales. Now, if you look at Mr. Gautam, who seems to be the auditor, he is confronted with a dilemma regarding the appropriate approach to evaluate uncorrected misstatements using the previously calculated materiality. You are required to guide him. Now, in this case, let's understand as to what is it that Mr. Gautam will be required to do. In the given case, it's been identified that the materiality calculated at the beginning was based on estimates. Okay, and of course, estimates are subject to changes. So when the actual number has come, actual number has been different. In the given scenario, auditor must review and reassess the materiality in light of actual numbers. So the point is that the materiality that you determine, can you change it subsequently? Or in the given case, when the materiality which you determined based on estimates, is that required to be changed in the light of actual numbers? Answer is always yes. Now, the next point is that what if this may lead to some additional audit procedures? So that will have to be done. What if the actual numbers have reached at a stage that the auditor is left with very little time? So that is something he needs to discuss with the management. So the point is that he cannot go ahead with any materiality which is based on estimates. It has to be based on actuals always. And even the actuals may be subject to changes. Why? Because of the audit adjustments, because of the errors. So will that also require the auditor to revisit materiality? Answer is again yes. Okay, clear on this?
Yes, sir. And also the materiality is from the client is different. They can fix some materiality. For
Right.
auditor, the materiality will differ
Correct.
based on his assessment.
Yes, of course. See,
And the yeah.
Yes, please go ahead. Yeah.
And all the performance materiality is only the auditor will do, not by the client. Client, they can have some performance materiality based on their standard.
No, for client, I do not think this concept is there about the performance.
There is no
materiality.
concept of materiality performance for
Okay,
the
why?
client.
Because it's more about giving the cushion to the auditor, because that's what we discussed. When the auditor will audit, he'll not be able to cover some of the errors, yeah, which could be there. So that's why you need to look at it from the perspective of auditor, not the management.
Yes, yeah, from the perspective of auditor, we have to fix the separate materiality. We have to
Correct.
fix the performance materiality. Accordingly, he has to work and provide the report.
Correct. Correct. That's absolutely correct. Okay. All right. So I think with this, we can just conclude our discussion for today. Any questions, any doubts, if you have, we can discuss. Otherwise, we can just close this session now.
Thank you so much, sir. Actually, today we heard a very good discussion in terms of this is one of the critical area.
Correct. Absolutely correct. I agree.
Actually, the understanding my level also is increased now, because the benchmarking also I had the different assumption and opinion from my side. Now it got clarified. And also what in depth, in deeply, you have discussed a lot of questions. In fact, see different situation, which really helped me to get a good confident. Now actually yesterday and day before yesterday also I am thinking about say confidence levels. I felt that it is low. Now it boosted actually.
Very good.
And sir,
Thank you. Thank you so much.
You
Sure.
prepare a proper flow of the discussion, sir. That is very good.
Okay, great.
And also you have covered that RTP question also, that Kavya case. It's really appreciated, sir. Thank you so much.
Sure. I think you should appreciate ICAI because they have been doing a lot of efforts at the back end. Okay, BOS team. And they are not visible at the front. So I think they deserve more appreciation. But it's good you have been learning, and that's been the endeavor both from BOS as well as us. All right. So I think with this we can just conclude our discussion for today, and I'll just pass it on to Tanya ma'am. Thanks everyone. Yeah.
Thank you, sir.
Thank you so much, Ajal sir. Thank you for appreciating us. Thank you for your session, and it is really making difference in the life of the students. They are really gaining the knowledge, and they as one of them said that they are gaining the confidence. So for this chapter number 4, and you have already read chapter number 1, 2, and 3, I would just like to say that don't cram these chapters. Just try to understand these chapters. Don't try to memorize. Just think, if you are an auditor and in this situation you fall, what would you do? How would you react? Or if you are going for an audit, understand the entity first. How would you understand the entity? What can be the risk in that? How you will control it? What are the possible risks in that scenario? So if you will think like this only, then this chapter is not difficult for you. You can easily answer in the examination. And again, you can prepare mnemonic codes also. Of course, you are required to write critical words or keywords in auditing examination. For example, inherent risk, material misstatement. Some students write material misstatement as mistake. Material mistake. No, that is not a correct term. In auditing, we use it as material misstatement. Then it is a detection risk. So you are required to use these critical words in the examination of auditing, and you are expected at final level to write, standards name and number specifically at final level specifically. So with this, I think we have Karuna ma'am also with us. So if ma'am, you want to share any insight of this chapter with us.
Good morning, students.
Good morning, ma'am.
Good morning,
Hope
ma'am.
you are enjoying and doing practice.
Yes.
Yes, ma'am. Really.
You're enjoying? You're practicing
Yes.
now? With the help
Yes,
of
ma'am.
MCQ practice portal, with the help of model test paper booklet, wherein question bank is also there for you.
Yes, ma'am.
Any query you want to ask? I think Tanya madam and Achal sir has already briefed about the session and what we have covered also. So whether you have any query?
As of now, no query, ma'am, because Achal sir is clearly explained in a layman language in each and everything, and also he given the importance of how to write the answer for each question. Don't simply write the answer. Analyze from the question and you try to answer. All these things he clearly explained actually today. It's
Great.
very good.
So I hope you are also preparing your own notes also. Just like Saransh, you are preparing your flowcharts and the questions which Achal sir is making you practice.
Correct,
You also write down after the class, right?
Yes, ma'am.
Yes, ma'am.
Okay. So in next class, we'll be ready with some of the questions on engagement and quality control standards. So whatever you have studied till now, be prepared for that. So we'll be having a small quiz after the session for 10 minutes, right? 10 to 15 minutes we'll be taking quiz for you. So be prepared. So we have told you in advance that you have to be prepared for the quiz.
Yes, ma'am.
Fine?
Yes, ma'am.
Okay, ma'am. Okay, ma'am.
All of you, please study thoroughly. So in the next session, after Achal sir explains the whole concept, we'll be having small quiz for you. So it will not be surprise quiz. It's already being told to you. So I hope you will be prepared for that.
On chapter 1 to 4, ma'am?
Right.
Chapter 1 to 4?
Yes. And whatever will be covered by Achal sir also.
Yes, ma'am.
Okay. So I hope you will be listening carefully and will be ready for the quiz.
Yes, ma'am.
Because ultimate aim is you should pass with good marks.
Good marks.
Flying colors, right?
Yes, ma'am.
So with this, I thank Achal sir and all of you for joining the session, and Tanya madam also. Okay, because she is interacting on regular basis also with you.
Correct, ma'am.
Yes,
If
ma'am.
you
Yes,
have
ma'am.
any feedback, do share the feedback with us so that we can improvise, because it's very important to have your feedback. Okay.
Yes, ma'am.
Yes, ma'am. Ma'am, actually, I really thanks to ICAI to such a initiative through the Board of Studies. They have given in all the aspect a student see like the baby is a small baby to till they reach the college level. The if everything they will be like that. I feel that is a ICAI Board of Studies is my family member now, because
Yeah.
they are very very giving. And wherever see in each concept they are asking, is there any doubt, is there any clarification? And it's it's look like the fiduciary relationship, like and father and mother, how the child is that taking care.
So we are here for hand
Yeah,
holding.
yes
Yeah.
ma'am, it is really lovely ma'am. I would say like this. Thank you so much for that.
And you can see that we are not having coaching person, we are having the faculty who are having really knowledge of auditing. They are in practice and they are having thorough knowledge of the subject.
Ma'am, there is a lot of difference, huge difference in terms
Yes
of
ma'am.
faculty which are present over here and others, ma'am. There is a lot of difference.
Yeah, because nowadays paper is practical oriented. Case scenario based situations are being asked that you face during your audit articleship.
Correct, ma'am.
Right? So be prepared, okay, for the quiz, and please
Yes, ma'am.
practice a lot and share your feedback. If any feedback you want to share that this is for improvisation in the study material or in the classes, or any other feedback if you want to share, you can definitely share with us. And one more important thing, that we are coming out with our mock test paper series, right? So in July we are having our mock test paper, and thereafter it is followed by successed CA exam that is conducted by BOS. Okay. So with this, I think we should conclude the session. And in next session, we'll be having small quiz. And of course, we'll be waiting for your feedback, whatever is your feedback. And Achal sir is doing hard, taking you through the auditing journey. And he's doing making you all practice lot of questions so that in the examination, you are able to understand the requirement and you are able to write the answer.
Correct,
Okay?
ma'am.
Yeah, yeah. With this, thank you. Thank you very much. Thank you, Achal. Thank you,
Thank
Thank
Tanya.
you.
you.
Thank you, all of
Thank you,
the
ma'am.
students.
Thank you,
Yeah,
ma'am.
thank you, everyone.
Thank you, Tanya, ma'am. Thank you, sir.
Thank you sir. Thank you
Okay,
ma'am.
thank you. Yeah.
Thank you both the ma'ams.
Thank you.
Hanji, Hanji.